for taking time to actually attend to our today's webinar itself. So today we'll do a little bit more interesting. I think we are going through what we call all you need to know about the UOBAM Megatrends Portfolio. My name is Roger, and I'm part of the UOBAM Digital Sales team, the customer success team as well. So let's quickly go through today's agenda. So at the start, probably for those who are unsure of who UOBAM is and who we are, so I'll just do a quick introduction in terms of who we are and what we are doing, in terms of scalability and our stability as well. After which, I'll hand over the time to Mr. Dharmo. I'll introduce him as well. The team will then he will actually covers a lot more into why invest into megatrends, and also going through the themes within the megatrends portfolio itself. At the same time, we do have our portfolio already done up since September last year. And from there, right, he will run through the performance of the portfolio. He will also go through the individual themes review and outlook going to 2023. And we'll end off with going through in terms of our UOBAM Invest app itself, how do you get started? How do you sign up? And then how do you actually select the Megatrends portfolio from the Invest dashboard itself? And we end off with a few Q&A if you have any questions on your mind as well. So UOBAM itself, right, is actually an Asian powerhouse with over 35 years in the making. Today, we are actually a leading regional asset manager committed to promoting investment excellence and driving innovation and embracing sustainability as well. As such, our purpose is actually to create value for our investors, partners, and communities, and to help them to achieve their goals and aspirations. Our vision is actually to be a trusted asset manager in Asia and leading in innovation and sustainability. So as an organization itself, we actually have 4 strategic pillars. So the number one is actually be digital first. We embrace technology and harness digital innovation. At the same time, we focus on sustainability, invest for both profit and purpose as well. We embrace our Asian heritage. We are rooted in the ASEAN region with a regional outlook and a footprint as well. And lastly, we keep customers at the center to provide top of the class investment solutions and performance, customer experience, and also the service as well. So next, we will actually go into some of our credentials. So we are industry recognized for our performance, commitment, and our proven track record. If you look at the map over there on the right, you can see that we actually have 9 markets in Asia. We are wholly owned by UOB Group itself, one of the strongest banks in the world. We have over 35 years of investment experience, and as of end January 2023, we have about 32.3 billion worth of assets under management as well. Across the group, we have about 90 over investment professionals, and we have won 308 awards since 1996. And the latest one actually coming end of last year, where we won one of the best fund house, best fund house in Asia over the last 20 years. So next, we'll probably touch on a little bit in terms of our advantage itself. So we have a singular investment management focus. We actually are the asset management arm of UOB itself. We have a dedicated fundamental research teams, and we are serving the needs for both institutional and retail clients as well. In terms of comprehensive capabilities, we are truly an Asian expertise team with best of the breed global capabilities. We are also part of the UN PRI signatory, committed to towards sustainable investments, and we have a comprehensive coverage across with a rigorous proprietary research as well. In terms of the platform, we are one platform with many solutions. We have plug and play API model as well. We're integrated yet modular in terms of our setup from that standpoint. And lastly, we are a trusted brand across Asia. 100% a subsidiary of UOB Group itself, over 30 years of investment excellence, and we have the largest domestic investment footprint in Asia. So we're very recognized with industry with over 190 awards for our fund management. Like I shared earlier, we just won the latest award for last year as well. So next, let me just quickly introduce Mr. Dharmo as well. So today's topic is actually why invest into mega trends, and also a quick preview, or rather a review of the performance that we have on the portfolio. So Mr. Dharmo Soejanto is actually our Chief Investment Strategist for UOBAM Invest. He is responsible to provide leadership in terms of the investment aspect of UOBAM digital platform. He is also concurrently heading up the investment partnerships and solutions unit at UOBAM, managing the firm's strategic ties up and investment initiatives with external managers as well. So Mr. Dharmo actually have over 20 years of investment and research experience in the finance industry. Dharmo, over to you right now.
Thanks, Roger. Good morning, ladies and gentlemen. Thanks for joining us this morning. Maybe I'll start by basically looking at why we should be investing in megatrends. I think what are megatrends? Megatrends basically are themes that basically extend not just this year, next year, but into the decades to come, and in which that there is a structural trend that affects our lives and affects society as a whole, right? So basically, from our point of view, Megatrend Investments is trying to target the structural trend that goes beyond normal market trends, beyond normal market cycles. And over the years, sort of strong structural trends have provided outsized return beyond normal risk premium associated with investments. And they have been challenging to analyze, but over years can yield returns far beyond what normal markets can provide. I mean, imagine if you have invested in Amazon in 2000 when it first started, right? Or if you're invested in Google in about 20, I think about mid 20s when it first started, or if you have invested in Tesla when it first started. So basically, these are companies that ride on long-term structural trends, right? Whether we become more digital, whether online shopping will become part of our life, investing in this sort of trends would probably provide us with outsized return over the long run. Right. So our Megatrend investment is based on a report that UOBAM produced called From Powerhouse to Power Center. Right. That was produced in March last year. After COVID, we think that these trends are is gradually shaping and would be what drives market and society in the next few decades. So we've actually identified 3 trends that we've seen. The first one is, of course, the changing demographics. Changing demographics means that I think we all know that in a lot of places, the society is aging, right? Whether you're talking about in Singapore, in which that we are aging, Japan obviously is the poster boy of an aging society. But even in countries like China, it is aging very rapidly. But on the other hand, you also have a changing demographics in the sense that the millennial are now a much bigger part of the population, or has a much bigger influence on consumption, and they consume things that are different from the way that the previous generation had consumed. There is an argument that millennials basically are not buying on goods; they're basically buying experiences. So that sort of lifestyle and that sort of consumption pattern are what we capture in changing demographics as well. The second mega trends that we see is what we call environmental. And although ESG is the rage, and some people think ESG is a fad, we think that environmental issues will be a trend that is irreversible. I think there is this push across the globe, and especially in Asia, in which that we would see a lot more initiative in terms of investing in environment, investing in climate change. So that's basically the second mega trend that we see. The third mega trend that we see is digitalization. I think that probably got a sort of boost during the COVID when everyone started working from home, in which that Zoom becomes a fact of life. Few years ago, you will never think that we would do a seminar via Zoom or via online. Now it's really part and parcel of everyone's life. But digital obviously encompasses much bigger than this. I mean, what we have obviously is things like online shopping. Think of ordering food online. That's really all part of the digital movement that we've seen. So basically, if we look at these 3 mega trends that we've identified, and we basically did a deep dive, right? Basically, as I mentioned, the world's population is aging fast, and for Asia, basically, by 2050, we have almost 1 billion elderly in Asia, right? So that's a huge group. And what does that mean? is that there is probably a demand for certain type of products and services. One thing we can think of is obviously healthcare. Healthcare spending is going to grow significantly in order to cater to the aging population, right? And I mentioned just now, millennial is now a more significant part of the world's population, and they're basically going to consume differently from the previous generation. And what we are also seeing is basically for the next 10 years, probably next decade or so, we are going to see the biggest transfer of wealth from the previous generation to the millennial, and that basically would basically give them huge consumption power going forward. Right. On the next slide, what we see in terms of the environmental trend, basically we are still very heavily reliant on hydrocarbons, but that's changing very quickly. I mean, if you look at it, almost most countries now have net zero target, but even China, in which everyone thinks is probably one of the biggest carbon producer, actually has a very aggressive target in terms of reaching net zero. And they actually is starting to put into place things like emission trading system or carbon trading systems, which is now the world's largest, covering about 2,000 over companies and over 4.5 billion tons of carbon emissions. So even in countries that are not first world, not fully developed and are still developing, even they are mindful of the sort of the carbon emission, and they are mindful of the impact on environment that they have, right? The third trend we talk about is digital, and basically, if you think of it, China is obviously the most heavily penetrated country in terms of smartphones, in terms of digital. Think of how efficient they are in terms of their food ordering or online shopping, TikTok, that emerged out of China in terms of sort of social media. They are actually probably much more advanced than many countries, even in the US and in Europe, right? So in terms of, for example, mobile payment, Asia is definitely one of the key areas in which that mobile payment is probably very well accepted, right? And that's really what we see. In e-commerce is really a significant part of our DNA today, which is even much more advanced than what we see in the developed country like US and Europe. Right, so this digital trend needs to be supported by digital infrastructure. Obviously, we need a lot of data centers. We need a lot of cloud computing. All these comes into the digital trend. Right, if I may go to the next slide. Basically, from each trend, we pick 3 ETFs to represent this trend. And we basically select these ETFs based on their performance, and how well they fit into the trend that we identified. So in changing demographics, what we chose, as we mentioned, was the iShare Global Healthcare ETF. This provides exposure to global companies in the healthcare sector, pharmaceutical, biotech, and medical devices. Then we pick Global X Millennial Consumer ETF. These provide exposures to companies that benefit from rising spending power of the millennial generation. The third ETF that we picked is the Colombia Emerging Market Consumer. As we mentioned, basically emerging market, as they become richer, their consumption pattern change, right? We've seen that once you cross a certain income level, you start consuming different things. For example, travel. Travel only happens, mass travel happens when the country or the economy reach a middle class. That's when people start to have budget to travel. right? Things like, for example, credit card, you sort of have credit cards only once you reach a certain level. So as the emerging market consumer develop, there's probably going to be winners and losers in this whole trend. Next slide. On the environmental side, we basically selected VanEck Low Carbon Energy ETF. This basically provides exposure to renewable energy companies. We invested in Invesco MSCI Sustainable Future. These again are exposed to environmental impact, alternative energy, but also energy efficiency, green building, sustainable water, pollution prevention. And the third one that we invest in is what we call First Trust Water. That's really more focused on water and water recycling and wastewater treatment. If I may go to the next slide. On the digital trend, there are three parts to it, really. One is obviously online retail. That's probably a bit overlap with sort of the millennial spending, but really focusing on online retail. The second part is really on cybersecurity. We think that that's really a big trend that is part of the sort of digital infrastructure. And then, of course, we have the artificial intelligence and technology ETF. As you guys are aware, probably the hottest topic that's been going around this year is ChatGPT, and that's really about artificial intelligence. Right. So what we do is that we select a diverse range of ETFs and a diverse range of sub-themes that basically play into all this mega trend, but provide diversification and provide diversification of risk so that we are not overexposed to any single particular theme or in the single particular industry, right? So that's really a more portfolio construction methodology that we use. And the way we actually weight it, how we allocate weight to it is really also is basically based on the volatility of each ETF, meaning that the more volatile you are, the lower the allocation, whereas the more stable ETF, we give a higher allocation. And this is our portfolio construct, right? So this is part of our portfolio approach in terms of letting you participate in the structural growth story, but at the same time, managing the volatility, right? I mean, what you can see is obviously the Megatrend portfolio delivered almost like 7% return in January. But if you look at it, that is after actually suffering quite a bit late last year, while markets sold off, and basically, especially sort of growth stocks were badly affected, right? Sorry, can you go back one slide? Basically, what we see is like, for example, different ETFs actually delivered different performance, right? So artificial intelligence ETF, for example, the best return ETF actually in January is the online retail ETF, which is up 22%. But if you look at it, since inception, it's only up 2%. So you can imagine that last year it was probably down about almost 20%. So there is quite a bit of volatility in this solution. But what we think that over the long term, this sort of structural growth will give you outsized return, right? I mean, the potential is that in January, we are up almost 7%. Next slide. Let me discuss the performance over the longer term. Our objective is really quite simple, right? So the way we measure this portfolio is we use what we call the MSCI All Country World Index Growth, right? That's basically an index that measures the performance of growth companies. And to us, is we want to beat this index. That's the benchmark. It is slightly different from the broad benchmark called MSCI All Country World, right? That's basically the light blue line. So if you look at it, since inception, we've basically slightly underperformed the light blue line, which is the broad index, but we are actually about in line with the growth index, right? And the growth index underperformed the sort of broad index. You can imagine that last year, given the rising interest rate environment, growth stocks sold off much harder, and therefore the growth index slightly underperformed the broad benchmark. But if you look at what our portfolio did, the Megatrend portfolio did, is that it performed in line over this period of time. But take note that in the up cycle, in the up market, this portfolio actually outperformed, right? So what we are saying is that in a growth phase, in an upcycle phase, this portfolio tends to outperform the growth index. But in a downtrend, it doesn't underperform, right? It basically, roughly speaking, perform in line with the growth index. So basically, what we have designed is a portfolio that has more upside, but about the same amount of downside. So that's really what we are trying to do for the portfolio. So that's basically what we highlight. Okay, if I may go to the next slide, let's talk about the outlook. Why we think that this is going to be what each team has done, right? So basically, the healthcare sector would perform better last year because it is a little bit more defensive, especially when you are talking about in market sell-off. Healthcare tends to be slightly more defensive in a volatile 2022. But what we've seen is that this year it's given back some, meaning that it has not performed as well, because actually this year, as there is more optimism about the China reopening, I think the growth year side, especially things like online retail, has actually performed much better, right? So basically, what we've seen is that consumer stocks have actually performed better, whereas healthcare continues to perform, but probably not as well as the broad market. And then if we go into the changing demographics. If we go to the environmental side, basically what we've seen is that performance are actually mixed. Water and utility sectors have performed well due to supportive government policies and demand for green energy. But electric vehicle makers like Tesla and NIO came under a bit of pressure because these are your poster boys for growth, and they were probably sold off a bit in 2022, although we've seen them make a bit of a comeback in recent months, right? But so that's really on the environmental side. If we go on to the digital side, it has held up well since the inception after being beaten down in the first 3 quarters. This digital aspect actually recovered in the fourth quarter, right? So basically what we've seen was that 2021 was a good year for digital. 2020 and 2021 was a good year for digital because of the COVID lockdown, and then last year because of the rise in interest rate. Basically, first 3 quarters, the digital portfolio didn't perform very well. Fortunately, our inception was in September, so it's since inception, the digital trend has actually performed relatively well, and we foresee this to be the trend going forward in the next couple of years. Next couple of decades, right? And if I may go to my last slide, that's really on our market outlook. Basically, after a sharp interest rate cycle last year, we think that the Fed is probably coming near to the end of its rate hike cycle. Fed fund rate is now close to 5%. We think that they are probably going to be about 5 to 5.5. That's probably the latest numbers that we have. And we think that they probably end the rate hike somewhere mid to third quarter of this year, and then we stay there for quite some time. So basically, the higher peak rate actually has increased the risk of a global recession. People are used to think that we might peak at 5, but I think that number has been gradually increasing, especially as the US economy and continue to be strong and inflation remains sticky, right? So that makes the equity market a little jittery and a little bit more volatile. Okay, so we actually expect a wide range of possible outcomes depending on how the economy is taking the interest rate hike. But given sort of the uncertainty of the broad market, we actually think that investing in sort of structural growth is the way to be for the longer term, right? So because whether market goes in a recession or not, whether we are talking about cycle, a lot of all these structural growth company will continue to grow into the next decade, right? All these trends about investing in environmental, in the environment is probably not going to change despite recession notwithstanding, right? So these and things like aging population is probably not going to change, and spending on healthcare, on old age care is not going to change, notwithstanding any recession, right? So basically, we think that this is really a structural growth story that we want to participate in, and we think that this portfolio really gives you that exposure. With that, I've come to the end of my presentation. Let me hand the time back to Roger. Roger?
Hey, hi, Dharmo. Thanks so much for the insights and a little bit of the information in terms of how the portfolio is. So before we go into Q&A, I'll just quickly run through how do you get started. In fact, in actual fact, going through after listening to Dharmo's presentation, right? I mean, if you're keen into looking into this Megatrends Portfolio, how do you get started? For those who are already invested, you probably know it's also a good chance for you to review some of the performance over what Dharmo have shared. So if you look at this, right, some of the clients may not have downloaded the app yet, or are still looking through and thinking ahead what exactly our app does and what do we represent. So UOBAM Invest itself is actually a digital platform investment wealth platform itself. So if you go to the App Store, you search for UOBAM Invest. You can download the app. So the first screens from the left to right, this is how our screens will look like. We have not started. You basically need to key in your mobile number. There'll be a validation code sent to you. After which we have a 2FA verification. So next we actually will need to key in your email address, and then again we will send you a validation code to your email address, and then you key in from there. Subsequently, after that, you will be prompted to fill in your username and your password. Sorry, can I have the next slide? Yeah, then you will have your username and password. And once you're done, then actually, in fact, you have completed what we call a minimum sign up of the account. This account, by going through the simple steps over there doesn't mean that the account has been approved, because after which, I didn't go into more details, is that you probably have to go through, if you're a Singaporean or PR, you've got to go through My Info, SingPass sign up. So once that is done, you can actually sign up from there, and we will actually go through the normal KYC and AML, and we will go through a risk assessment as well to ascertain your risk exposure. But for the interest of time, I just want to quickly move on to how the app will look like, which is actually the next slide. So on your left again, apologies if it's a little bit small, because this is actually the full length of how the screens will look like if you scroll down the app itself. So on the left itself is actually our dashboard. So that gives you an overview in terms of what is the total assets you have at the top. At the same time, we have a few portfolios over there. As you can see, there's a core portfolio and there's a satellite portfolio. So for today's presentation, we're actually talking about one of the portfolios within the satellite setup, which is actually our Megatrends. So under the satellite portfolio, we have the Megatrends portfolio, which is what we call a thematic portfolio. At the same time, we also have what we call a Fund Direct. So Fund Direct allows you to invest into our UOBAM managed funds directly without any cost. There's no sign-up fee, there's no sales charge, there's no recurring fee as well. So take advantage of that and look at some of the funds that's being managed. And one of the fund is actually recently just gotten another award, which is our United SGD fund, which is a flagship fund as well. On top of that, you see the core portfolio. So that is our digital advisor robo portfolios. We have published the results on our website as well. So please take a look at that as well. That is for another topic for another day. And Dharmo is also Dharmo is also the one that's managing the portfolios as well. So moving on to the next screen, if you tap onto, sorry, probably the previous slide. Yeah, if you see Megatrends Portfolio itself, right? If you tap on the Megatrends Portfolio, you will see that we actually explain what exactly are themes that what Dharmo has covered. We also highlighted the risk classification. This is really for the long haul, and it's not looking at about 2-3 years kind of a short term, even not for the 5 to 8 years kind of a short term duration, because we think that these are the secular trends that will actually prosper and thrive in in the next few decades. So these are some of the trends that we want our clients to participate in on the long haul. And if you to go into getting started, we'll actually explain what exactly the portfolio is, what are the underlying ETFs, like what Dharmo have shared. And imagine if you have invested into the portfolio, right? The last screen on your right is actually showing you how it will look like. Basically, we'll tell you what's the total portfolio value right now. If you see the first arrow, that's actually pointing towards your view performance, and second arrow pointing to the portfolio details. So if you move on to the next slide, we'll actually show you how that will actually goes into. So the next slide actually shows you the portfolio details itself. So we will go individual ETF itself to tell you how. Okay, so for the interest of the members on our audience today, this screen is actually referring to the core portfolio, not to the mega trend. So just FYI. So some of the ETFs names over here and the asset allocation, please ignore. But generally speaking, the context is that how is it being laid out. So if you look at how the individual ETF laid out itself, right, we will actually highlight what's the cost, what's the current value, what's the P&L. And the second tab itself refers to the performance. So the performance, we have your standard 1 year, 3 years, and also since inception as well. So that actually shows a nice overview in terms of how the portfolio has performed. Lastly, in terms of allocation and all that, we will show you actually where the ETF is being allocated to, or it's actually where the portfolio is being allocated to in terms of the analysis. So where the geographical breakdown as well. So if you go on to the next slide, just for our members here today is that right now we actually have a promotion right now on the Megatrends portfolio. So the management fees for the Megatrends portfolio is at 0.4% until 30th of June. And for those who have not signed up, if you are signing up with our AM Invest app itself, basically once the account is approved, you actually get $10 credits from us actually to kickstart the whole investing journey. So let me just quickly run to the next slide. And as an investment house, like I shared earlier at the start of the presentation, please feel free to scan a QR code, like us and follow us on Facebook and also on LinkedIn itself. We do publish quite a number of articles and very good content articles on our website as well and on our Facebook. On essentially, I think we are covering about 2 articles per week. And the recent market turbulence and volatility, we've been covering a lot more from there as well. Our angle, our investment managers have coming on, giving their interviews and also giving their insights into how the markets will actually pan out as well. So probably let me just quickly bring in Dharmo again to run through some of the questions that we may have. So Dharmo, maybe I will start off first. So thanks for going through how the whole portfolio is, and maybe just to identify a little bit, because is it because how the population is evolving, generally speaking, and hence the trends are emerging, rather than we are identifying these trends before we go into, or rather how these trends will shape the population, but more of the other way around is while we are seeing the current population on a global basis, hence the trends are being identified from that standpoint. What's your view on that? Yeah.
Yes, I think you're right. So basically, we look at how society is changing and how the world is changing, and we identify the trend from there. I mean, basically, these trends tends to start to emerge. I mean, you basically see. I mean, we probably we're not trying to jump on any trend or any new thing that developed. What we basically want to see is that any trends basically gradually building up and gaining enough momentum that we can see that it's going to be a long-term trend that before we really invest in it. One example I can give you is, for example, ESG. So we think that ESG is a trend, right? But to us, we think that ESG ultimately would become the norm, in a sense that all investments would be ESG linked. All companies would need to be aware of ESG. And therefore, to us, investing in company with, say, good ESG score is not a structural trend, or it's not a mega trend. We think that that plays out in a few years. And so therefore, we think that doesn't come into the megatrend portfolio. Whereas environmental, we think that investing in environmental or investing in climate change is going to be going to take decades, and therefore, to us, we think that that's really a structural growth story. So basically, obviously, within those, there are some things that might be shorter term and something that might be longer term. I give you an example. For shorter term, which basically the ETF still invest in, is things like electric vehicle, right? So electric vehicle, we think that it's now has gone. The idea has gone mainstream. That in several years, before the end of this decade, they would become the mainstream, right? And so if they become the mainstream, then investing in electric vehicle is really no different from investing in any car companies today. So that's why we think that some of these trends do develop, but there are sort of short-term or medium-term ideas, but in the long run, conceptually, investing in reaching net neutrality or carbon neutrality will not be achieved until, say, 2050, right? And so therefore, from now to 2050, that's about 20 over years, 2 decades, in which that there are companies that help the world and all of us to achieve carbon neutrality. Those companies are what we call, would probably enjoy the sort of the structural growth during that period of time.
Thanks, Dharmo. I think following up on that point, right? Since you brought up some of the sub themes within the main theme itself.
Mm-hmm.
So going on the digital side, I think you have highlighted the 2 particular ETF. One of them is actually into AI, and the other one into cybersecurity. So what's our view on that? Basically, why do we select cybersecurity and AI? Because I mean, within digital itself, we have a lot of themes over there. We have probably data centers, we have cloud computing,
Right.
and now we ChatGPT and all that, right? So what exactly, or rather, maybe ChatGPT is considered as AI. So what do we, what is our thought process basically to say, we have these 3 teams over there, and I think the next question probably is going forth. Can we have a 4th sub team, or do we have to remove some of the teams? What is our overall process from that standpoint? Yeah.
Okay, sure. I mean, we look at we try to find a diversity of sub teams within each team. The whole idea is that when we select the ETFs, we actually deliberately pick ETF that are not too highly correlated. I mean, obviously, there's still going to be strong correlation, but we try to find ETFs that are not too highly correlated so that it offers diversification benefit. So, and basically, for example, the cybersecurity, to us, we think that that's a very important area or infrastructure for digital to continue to expand. I mean, obviously, cybersecurity is always an arms race. We know that there's a lot of concern about online security, internet security, digital security, right? So, and it's an arms race that we think will continue to is almost there's not ending. So to us, we think that investing in that sort of infrastructure is necessary. Why not data center and or cloud? I think of cloud computing probably falls under the AI and technology aspect. That probably covers some of the cloud computing side. But to us, investing in data center, that's really more being a landlord, if we put it crudely. And that's really not the kind of growth that we are looking at. So I think that's probably the thought process behind this. Could we identify the fourth sub-theme? I think we can. So what we are trying to do is trying to balance the number of ETF that we use. So we reckon that anywhere between 8 to 10 sounds like, looks like a very nice number. Each sub-team, we try to identify 3 ETFs, and that basically forces us to be more focused on in terms of our investment view, and to build a conviction on our investment view, and 2, so that each ETF is a meaningful contributor to the performance, right? We don't want to have lots of ETFs in which that only accounting for 2-3% of the portfolio, and may not contribute that significantly. So we are trying to find that balance between diversification, yet choosing ETF that would have a meaningful representation and a meaningful contribution to the portfolio. I think that's really the thought process behind how we construct the portfolio.
Thanks, Dharmo. I think that's a very nice analysis in terms of, and pretty detailed into how the team is working on. Because also one of the questions I was thinking is, how do we allocate? Why this particular weightage? Because I was just looking at the performance numbers. In terms of weightage, is about pretty even. We have 12-ish% on average, probably across some of the ETF. So I guess I mean, our clients here today probably have an understanding on how it works. So maybe going one level above, right? I mean, I just want to talk about the core and satellite and how the EM Invest is being structured. So how does one actually plan out in terms of doing my own asset allocation? Because I mean, let's say for example, I'm very much into a firm believer in some of the secular trends that we've identified, but how do we add that into our overall portfolio allocation? Because maybe there are not a lot of people that probably understand what's between a core and a satellite. So do you want to help to probably educate the clients here a little bit more in terms of how the satellite can come into the overall portfolio allocation perspective as well? Yeah.
Sure, great. Thanks for that. Basically, we always advocate that you need to have a core portfolio first. This is really your bread and butter, investing in very broad market, in which that the focus is really on asset allocation, depending on your risk appetite, right? So we are talking about a balanced portfolio of equities and fixed income, broadly speaking, that you build that portfolio for the long term. Right, so as much as we believe in a megatrend portfolio, we don't advocate that you put all your eggs into the megatrend portfolio, because it is going to be volatile, right? I mean, the idea is that Amazon did very, very well if you invest since it went public, but throughout that period, you would see a few episodes in which that there's 50% drawdown or 50% sell-off in Amazon throughout this period. I mean, you can imagine that during the dot-com bust, Amazon would have lost almost 80% of its value on that episode. So basically, it is not for the faint-hearted. And for us, what we try to do is, one, we try to minimize that because we use a portfolio approach, right? And we basically try to create a very diversified portfolio so that we reduce that risk for you. And secondly, as I mentioned, we basically allocate based on volatility as well, so that the more volatile ETFs actually take a smaller weight. So that's controlling your risk. So if we look at the sort of the underlying holdings as a result, the biggest holding of the megatrend portfolio, if we look at individual stocks, would be Tesla. But Tesla is still only about 1.8% of the portfolio. And the top 10%, the top 10 holdings of the portfolio makes up almost, at most, about, roughly speaking, less than 15%. It's probably closer towards 12% of a total portfolio. So it's a very, very diversified portfolio. And the reason we want to do it this way is so that you don't take a very big risk on any particular stock, right? So that's how we think of it. But the megatrend portfolio is still going to be fairly volatile. And so we advocate that you only allocate a small amount of money. That depends on what's your risk appetite. That could be somewhere like 10 to 20%, in which that what we call is a satellite portfolio, in which that if you believe that you want to invest in growth, you want to invest in this sort of structural growth story, you can allocate a certain amount of your whole pot into this megatrend portfolio so that it gives you a bit stronger growth and a bit more juice, right? If you are more conservative, you might say, okay, I'll just put about 5% in my satellite portfolio and leave 95% in my core portfolio, because that's really still your bread and butter. That's really your ignis in which that we manage in a very risk aware method.
I think thanks, Dharmo. I think that pretty sum up in terms of how the allocation will be doing, because we are also cautious about how the mega trends will turn out. This one we are really going for a few decades. We are not going for the next 3-5 years and all that. So I guess
Correct.
for our clients, probably everyone have to recognize the fact that it's supposed to be a long-term kind of a situation as well. So maybe in the interest of time, probably one last question is about how does the Asian leadership or the economic leadership come into place? Because there's one way, because we do know that the underlying are actually US listed ETFs. But having said that, if I look closer in terms of the securities that's within the ETF itself, they are tracking, some of these companies, majority of the revenue are also deriving from the Asia, ex-Japan, or APAC region in fact. So does it mean that we get that kind of indirect exposure if the emergence of Asia coming up after the reopening from China as well? How do we play that out? Because I mean on surface level, I've invested into a US listed ETF, but what is the underlying that companies that we're going for that end up, we actually do get a share of what how Asia is going to boom, and that's our view as well as a house to say that with China reopening and all that. So does it help in that sense from that planning perspective as well?
Definitely. I mean, if you look at it, I mean, the ETF is listed in the US. The underlying stocks, there will be Asian companies in there, but even if you think of the US companies, right? The biggest growth driver in some of these international companies, I don't even call them US companies, is these international companies are really Asia, right? I mean, as I mentioned just now, the top holdings is Tesla. Tesla is building plant in China, and China is probably going to be the biggest market for electric vehicle and the biggest market for Tesla. So in this sort of environment, I mean, the growth, Tesla is growing, I mean, both in the US or globally, but the biggest chunk of that growth is also Asia. The second name we have, for example, third name we have is Johnson & Johnson, for example. And that from that part, the growth is really coming out of Asia, because their market in US and Europe are actually probably a bit more mature, but their growth is really coming from sort of the emerging markets in Asia or in Latam or in other emerging countries. So that's really what we see. A lot of all these companies may be US companies, but their revenue, they derive a big part of their revenue from outside their home base or from their home country. But more importantly is that their growth is really driven by all these emerging economies, especially in places like Asia, right? So China reopening, we always joke that, one of the biggest beneficiary of China reopening is luxury good companies in Europe, right? So that's really the kind of dynamics or economics that we are talking about, in which that you might be a European company, but your exposure to China is actually very, very strong. And therefore, China reopening benefits this sort of companies. And a lot of all this underlying, it's the same thing, right? So we were talking about the millennial and all those things, whether they drink the Starbucks or whether they buy Gucci, it benefits the global company, but really from this global company's point of view, their biggest revenue driver is really out of these emerging economies and out of Asia.
Thanks, Dharmo. I think I don't see any questions from the crowd, so probably we will end off today's session. Many thanks to you, Dharmo, for taking your time to give us a very detailed overview in terms of the whole Megatrends portfolio. And as well to our clients here today, right? So for those who have not signed up to AM Invest, so do complete the whole account opening process as well. And then you actually, the promo right now is if you sign up, you get a $10 credit from us without doing anything, to be honest. And also probably the other one is that for Megatrends portfolio, the management fee right now is at 0.4% per annum, and we charge on a quarterly basis. So basically one quarter you're about 0.1%. So that's how the ongoing promotions that we have right now. And we thank you for your time, for everyone who have joined in today for this call. Enjoy your lunch, enjoy the rest of the week, and we'll see you soon then. Thanks, Dharmo.
Thanks, Roger. Thanks,
Thanks, everyone. Cheers. Bye.